tantrum would be a NASDAQ leading the S&P. So if I look at a taper tantrum, this is what we see here, isn't it? The NASDAQ here, the NASDAQ in orange, is leading the S&P, which is this very gradual, very reluctant sell. That's what a taper tantrum looks like. So we can identify taper. We can identify taper by seeing the NASDAQ leading the S&P lower. Because remember, what's the environment for taper? Higher rates, higher rates, higher rates, less cash. People will move their cash into more obvious opportunities. Less cash means top edge equities, which means starting to sell off some of the more dubious stocks in your portfolio, perhaps some of the higher PE ratio type stocks in your portfolio, some of the more rate sensitive stocks in your portfolio, because taper means higher rates, you're more likely to sell. So this is the type of environment that we would start to recognize if we started to see higher yields. Now you might be saying, but if we started to see higher yields, surely the idea would be to buy the NASDAQ. No. Surely the idea would be to buy the S&P. Yes, if it was discounted against the NASDAQ. S&P is not discounted against the NASDAQ. The S&P is leading this process. The S&P is actually being bought against the NASDAQ selling inside of that taper process. You might say, well, surely the trade must be to buy the NASDAQ then. Well, it depends what's causing yields to rise. Because obviously this is why we want to always make sure we can qualify the rise in yields, because if we look at that storyline, we want to try and make sure we understand what's going on. Because at the time, bond prices were falling as well as equities. Bond prices. Bond prices, look, it's almost gone positively correlated, hasn't it? Look. And you think to yourself, how can the bond price be positively correlated when most of the time it's negatively correlated on any global macro? Because there's a taper scenario developing here. That's why. This idea that inside of this normal, if this was a normal environment, what would the bond price be doing? The bond price would be doing this. If the bond price is doing that and we start seeing that idea, and then we start seeing perhaps a little yield divergence evolving in the market, and we start saying, okay, there's that yield starting to show up and all that sort of stuff. In that type of environment, then we would look at the NASDAQ and we say, well, NASDAQ looks like a really good proposition because the yield has already gone bullish. Chances are the yield will stop the bullish move as equities start to rise and wait to see just how much bullishness comes in from equities. But that's not what's happening. We are in a taper market here, and then when we see that taper, what normally happens, and this is the normal, it's like bull flatteners get into bear steepeners, but bear flatteners get into bull steepeners. It's that type of rotation, isn't it? So we go from the tapering tantrum phase to the easy money phase, or the easy money phase could simply be an unwind of the tapering tantrum phase. It could be the unwind phase, right? And that's why we get bonds and equities both going in the same direction at the same time. And that's what we've got to try and understand. It's not just about the line, is it? It's about understanding the line. It's about saying, wait a second, this doesn't make any sense to me. And then understanding why it doesn't make any sense. Understanding that we've made mention of this now about 3 or 4 times today, plus several tweets. We talked about this idea of taper chatter, negative for both bonds and equities, which means the unwind of the taper chatter is going to be positive for bonds and equities. So if you're using equities, you're going to be on the wrong side of a bond trade. If you're using equities to try and figure out what the bond's going to be doing, you're going to be getting busted massively today. That's why you've got to learn how to read the marketplace properly. Oh yes, it's not as easy as you think.